I'm Arthur Mrozowski. I'm welcoming you today from Bay Area. I wish to be there in Texas. I'll be later on in the evening. In any event, I'm kind of a veteran for over 35 years in Silicon Valley, starting up as a software engineer and working my ropes up all the way up to having a boutique Silicon Hill Ventures. Also involved right now with the very interesting life science company that is designing a breakthrough testing for COPD. So that's my history, but that's not about me. It's about the future or today of 2022 of what's going on with the venture capital, and then of course it's about the panel that we have here that is assembled in that has all kinds of really great ideas on where the trend is. So I'm going to start with Alexa Binns and let her introduce herself and tell us a little bit about yourself. I'm especially interested about your Maven history, where Maven and Jim Shaman is actually invested. He was the first investor into the Zoom. He was very early, and that's a mutual friend of ours. So tell us about yourself, what it is that you do, and then we'll just take a roll of everybody.
Sure, maybe this one's off.
How about now?
Yeah.
Yes, should you all meet Jim Scheinman, the first thing he will tell you is he named Zoom. So I'm not surprised you know that fact at all. Jim is who taught me the ropes in venture capital. It's a bit of a apprentice business, and I recognized I had a lot to learn, so he brought me under his wing at Maven Ventures, and I started there as an associate, and then moved over to Halogen Ventures, which is Jesse Draper's fund. That's Tim Draper's oldest daughter, and helped her basically invest in consumer tech companies that have at least one female founder. And as of next month, I'll actually be joining Wiz. So I'll let him introduce Space Cadet.
So Wiz is your full name, Wiz, with no last name, just like a prince in the music, I suppose. But let me tell you, let's hear about what it is that you're representing.
Yeah, trying to go for the Prince branding for sure. My name is Wiz. I'm from a small fund called Space Cadet. Classic route of startup founder turned investor. Started two very boring HR tech companies. First one's a $100 million company in value today. Second one was acquired in late 2019. That's when I made the jump to venture. Had spent 10 years building startups and wasn't really itching to get my hands straight back into the fire. Yeah, Space Cadet is the marketing VC. I've seen firsthand that there's only so many ways that VCs can actually be helpful, despite all the ways that they tell you that they're going to be helpful. We happen to think that marketing is one where there is a lot of white space and opportunity to be helpful, and where me and my partner Daniel and Alexa are all uniquely qualified to help.
All right. Well, Ricky, how do you pronounce your last name?
Tejapaibul.
Okay. All right.
Can you guess what country it's from?
Ricky T.
Ricky is managing partner and CEO of Tech Wildcatters. And then you're based in Dallas, right? In Texas.
Yes, we are headquartered in Dallas, so we have portfolio companies and team members from across the U.S. and also internationally.
Can you tell us a little bit about yourself?
Yeah. So as you can tell from my name, I was born in Thailand, grew up half in the U.S., half in Thailand, and as an investor, I started with investing in public markets, other things, and then one day I realized that I want to not only move money around, but also add value to these early stage companies that you can not only provide capital, but provide mentorship, guidance, help connect founders with mentors, with the potential customers, potential investors. I started doing it as an angel investor. Then I realized that it's much more efficient to do it as a program, as a fund. So then I joined Tech Wildcatters. So Tech Wildcatters started since 2009. headquartered in Dallas, Texas. I joined them in 2016, 2017, became the managing partner, and we've had so far 13 exits already across 8 smaller funds that we focused on the pre-seed accelerator to the seed stage. And right now we're raising our first institutional fund that's going to allow us to, as we grow with our portfolio companies, also invest up to the Series A and follow-on level.
Great. Well, on sombering news, I just read across the table that the startup funding is dipping since last month. There was the funding fell 17%, about 10 billion. All of it pretty much across the board, minus the fintech. Fintech is still sort of defending itself. So, Alexa, what do you think? Where is the future of? What's the 2022 like your focus? Where do you think everything is heading?
Yeah, that's.
I wasn't talking to you, Alexa. I just need to turn her off. That's the second half.
That's not the first time that's happened to me. I think certainly in the public markets, if you right now anything hardcore tech feels very overvalued, not a great buy, but we're making the bet that certainly technology is going to be incorporated into absolutely everything in the future. So with a 7 or 10-year horizon, rather than looking at the macroeconomics of what's happening today, we'll be investing in these pre-seed and seed stage companies that I think can sort of ride a wave of whether we're heading toward a downturn or whether these sort of like Teslas, Amazons, and snowflakes are overvalued today. I think we're going to get to a point where you'll be very happy that you invested in pre-seed companies 5 years or 7 years from now.
I think, Arthur, are you the one who said that tech is always overvalued in the year but undervalued over the long term? Is that were you the one who said that, Arthur?
Well, I've not everybody. I mean, there's definitely what I'm saying that right now the only like the trend is that the fintechs seem to be holding up. Everybody else is just diving a little bit. I mean, 17% is a big dip in investment. So it's hard to say whether there's a long-term value. How do you assess that, right? I mean, it's just a roulette. I guess educated roulette for some with having all the AI tools and all the data. But when you look at from the global perspective, you see the trends, and the trends are the only thing that you can measure things with, right? So yeah, the tech is still going to defend itself, but I think that it's going to take a cycle of at least like a good cycle. Although the cycles seem to be shorter. Every time there is a cycle, those cycles are shortening somewhat. But yeah, we need the tech. So I think we're safe in terms of the investment. But I think that anything outside of those selected group, like life science and fintech, everybody is just trying to reevaluate where the money is going to go. But anyways, I just wanted to ask you. Just a little bit to kind of get a more understanding on Space Cadet, with like, tell us, I'm a brand new startup and then I walk into you. What's your sweet spot and what kind of companies you're interested in, and then like what's the sweet spot in terms of the investment? And what are you guys looking for? The new partners, or you're still raising the capital? What's going on with you?
Yeah, so we're exclusively focused on pre-seed and seed, very early stage. Like to go as early as possible. Sometimes pre-product. We're small check, complementary capital, only 100K. We're investing out of a $15 million fund. The big lens that we have in the world is what we call better future. We want to be able to make a case that there's something good about this company for the world. I'm a big believer that venture capital in its best form isn't meant for things like CBD gummies and quarter-size shoes. It's meant for things that actually help move us forward. So those are the things that we try to invest in.
What about you, Ricky? What's your focus, and what kind of companies are you looking in 2022 to invest in?
Yes, so I agree that we can work with companies as early as we see that if the founders are onto something and somebody that we can help with. So ours is a mentorship driven program. So we find the right corporate mentors, corporate partners. Then most of the time these companies are too early to actually work with the corporate. So we help bridge them, get them to grow to a point where they are ready to work with the corporate. So we're industry agnostic. About 2/3 of our portfolio is B2B. Having said that, within that outlook, we also have industries that we overweight that we feel in the next 2 to 3 years. And it's been something that we've been looking at even before the recent geopolitical things that's happening, but with this accelerating even more. I think in logistics is a space that we like. Ag tech, food security is something that's going to be a choke point over the next year or so if this world conflict still continues to go on. So those are the sectors, and a little bit more out of the necessities, but something that's fascinating is on the esports side. I think that there's that, and then connects with the metaverse. I think there's some plays there, but there's a lot of noise. You have to look at what is really going to have value, while what is going to eventually consolidate.
This is a question for Alexa. Not you, Alexa. I hope I turned her off. So how do you guys look at, because there's a bunch of theories, because the Silicon Valley, there's somewhat of an exodus going, people flying, moving to the Texas, to Austin and New York and so on. What do you think is happening with the VC? Are they also moving? I mean, I know that Elon Musk has moved to Austin, but he's not necessarily venture capital. He's just like doing it for a business. And Oracle, he's probably going to finish his run with the business in Austin. But what's happening? I mean, is the Silicon Valley still as important as it's always been, or is it really going to eventually the flow is going to move somewhere else?
Miami.
Yeah, all the engineers are in Miami. I'm new to Austin. I moved here 2 months ago from California, and I'm on a WhatsApp group with what seems like a different new VC being added to the group every day. Some a representative from an established fund in California or New York. So I do feel like there are these satellite offices of really established firms that are coming out here and building this sort of Austin VC tech scene. I'm a proud angel investor in 2 companies that started in San Francisco and have been based here now for a couple of years. Chubby Shorts moved out here many years ago and has since been acquired. And Sana Health is another Austin company. Sana Benefits is doing really well. If any of your companies you work with need healthcare coverage, they offer great benefits for companies with under 5 employees, five or more employees. I think those guys, when they made that decision to move their teams out here about 5 years ago, it did feel like they were glad that they had at least established their companies in San Francisco so that they could get their seed funding, they could get going as companies. But what I think the strategy today is that the real upside is still with the top 20, 30 VC funds that really are pretty well established for the most part in Silicon Valley. And our job is to alley-oop any of those companies, whether they're starting here or starting elsewhere across the states, across the world, still alley-oop them to those major Series A, B, C investors, because that's what can really help put them on the map. So I do believe that those companies can get started anywhere, but there's still a real benefit to having the established Palo Alto scene sort of under your wings.
Question for you is what do you think, like the new, like the discoveries, what are the new trends in your startups and in the early stage VC? What can you tell us about any interesting companies that are on your horizon that you wanted to invest in, or If you can tell us something about that, what are the trends?
Yeah, the things that we've been spending the most time in are obviously Web3. Everyone's talking about it. So we've been spending about 30% of our time on that and have made a couple Web3 investments out of the new fund. I think Metaverse is also a really interesting opportunity. Last year, Oculus sold more headsets than Microsoft sold Xboxes. I think we're moving to a world where headsets and playing in VR will be way, 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 way more common. There'll be interesting opportunities there. We invested in a therapy company doing therapy in the metaverse, which is really interesting. I think we'll see a lot more over the next decade in climate tech. It was popular, 20 years ago and sort of fizzled out. There weren't the returns there that people were hoping for, but I think we're seeing renewed interest there, and also, lots of new technology coming in to sort of fill some of those gaps that maybe we saw last time people attempted to take a big swing at it. Lots in education as well. A lot of people are rethinking what education should look like over the next 30, 40, 50 years, both post-secondary, but also primary. Those are the spaces we've been spending the most time in. We've done some robotics as well. I think there's still lots of interesting opportunities with robotics over the next few decades. Lots of sort of obvious opportunities where it's like, oh, this probably shouldn't be a human doing this. It'd be way better with a robot. Those are the themes that I'm excited by today.
Great. Ricky, you've got your mentoring. You figured it out how to connect that, but the early stage with mentoring, with actually getting the companies be directly connected into the ecosystems of an existing corporation, so you can literally test out your product. I mean, the actual concept of the company going into early stage phase of building MVP, getting into the product onto the market, and then helping then to go to the next stage. So can you tell us about any success stories from the group of your companies, how that whole happened? What are your successful exits or something that you're working on in that format? Because that's sort of an alternative VC, right? You have a little bit of a hands-on mentoring, incubation, almost like a YC combinator.
So we're almost like a YC combinator, but we're a lot more hands-on. So each of the founders come in, we build a customized mentorship program for them, and they can grow at their own pace. So we don't do a big demo day after 12 weeks, because that puts them on stage to focus on short-term metrics, whatever that they can present on stage. But we tell it that the real winner is not somebody who wins a pitch competition, it's somebody who builds something that's going to be sustainable long-term, and whether your exit could be IPO, could be a corporate acquisition, or whichever type of investment. So with corporates, sometimes you may not even have to look at a very deep R&D type solution. It can be something that helps solve some inefficiencies for corporates. For example, we have a company in our portfolio called BitOps. They're based in San Francisco. They came to our program because they want to connect with, whether it be corporates, it be local government. So they have big name clients. For example, BASF is their client, or Los Angeles airports, or things like that. Because in procurement, it's a very inefficient old school industry. You just have to come in with stacks of paper, and with that, not many vendors want to bid unless they're pretty sure they're going to win, because it's just a lot of work. So for the buyer, you want to have the more bidders, the better. You get better terms, better products to choose from, and better pricing. So how do we make that process simpler? And the founder, Edmund, he was in the procurement industry even before. He realized it's a problem not only for him, but for other founders, for other practitioners as well. So he left his six-figure job and decided that let's try to build a product that's going to solve that problem for the industry. So with that, it's so scalable, because these corporates, they spend millions, hundreds of millions in procurement every year by improving the efficiency by a couple percentage points already saved these companies millions. So a lot of times the solution may be very simple, but it's about how to build something that resonates with the actual users. You can have a really good product, but if you cannot connect with the right users at these corporates, then it never comes to fruition. So those are the type of founders, but and how we can help them make the right connections, help fill the holes that the founders, we tell them, hey, you're the expert in what you do, but none of us are experts in everything. How do we help surround themselves with experts that can help them get there faster?
Okay. So that's interesting. So you're relaxing this incredible fast track of doing the YC, and just organically you allow the companies to integrate themselves into the industry and so on. Very good. Alexa, everybody is doing, is raising the VC fund nowadays, right? And so what to look for a GP in this scenario? You have probably the most experience in that.
Yeah, the joke is that everybody and their dog is raising a VC fund right now.
Tweet yesterday.
And there was an era, I'd say 2013, a friend of mine was finishing HBS, and his pitch was, I'm going to be a millennial VC. And it was crazy. Nobody had ever heard of this before, that I'm friends with the guys starting companies, so I can just invest in my buddies. Because the average age of a venture capitalist at that point was a silver hair, somebody who'd been through the ringer, and that's who did venture. So today you can be a Facebook alum, an Uber alum, an Amazon alum, and you're taking that same strategy saying, I'm a millennial, I'll just invest in all the people who worked at the company I was just at when they go start their companies. And it's become a sort of pretty common trope. So I do think the question of what to look for in a GP, and I'm an LP in quite a few funds, is some on-ramp onto that major capital. Because there's the question of access, of who you can get access to. I think there is a little bit of a popularity contest to be able to get into the hottest deals. And then from there, it's really about making sure that the super serious investors are the ones following on your investments. And so Wiz here has done an amazing job of lining up almost like a multi-scout fund. We've got a lot of really impressive investors who are investing in us. And so we can alley-oop those companies to the bigger guys. And similarly, working for Jessie Draper, she had access to Silicon Valley Road. So I think that's what I would look for in a GP, is certainly at the pre-seed and seed stage, is where's the next round of money going to come from?
Great.
In about 5 minutes.
Okay. Well, the conversation could go on and on, because this, but Wiz, since we're doing the family office, the Ivy family office, what do you think that what's the cooperation? How can like a VC cooperate, intermingle with the family offices? Have you guys thought about like teaming up with the family office in raising additional funds?
I mean, obviously, the first priority for us in working with family offices is to get an LP commitment to build our own fund. Outside of that, I think for us specifically and other small funds like us, we're not reserving any money for follow-on. We're only doing first checks, pre-seed and seed out of the fund, and trying to do all of our follow-on opportunities via SPVs. I think there's opportunity for co-invest or direct invest into those SPVs that family offices could certainly participate in. I think where we've struggled though is, probably a capacity problem for the family offices to timely review the deals and help us fill those SPVs, and also, related, sometimes just a bit more lead time than what we actually have from the founder when some of these Series A's are moving so fast. yeah, certainly more opportunity for support there outside of, just a standard LP investment.
Great. Ricky, I just we're kind of going to end the panel. Just the ones to get like a quick summary of maybe a minute from each one of you on where you see the 2022 in terms of the changes, and whether what are your hopes and worries for this coming rest of the year.
I think that with the pandemic, you saw it from 2 years ago, and certain industries get accelerated a lot faster. And now with the geopolitical, whether it be energy prices, food prices, or supply shortage, you're going to see certain industries get accelerated. But then as it reverts back to normal, hopefully it gets back to normal soon, then only the ones that are building a model that's sustainable are here to stay. While you see a lot of overvaluations in many companies, many industries, because there's a lot of capital over the last 2 years based on monetary policy and returns to the market. It's coming back. I also see the concern on overconfidence, and that goes on to the family offices side, because family offices, usually they get most of their wealth was generated from 1 or 2 industries. So they're the experts in those industries, and they can invest, they can do well, and we look for their advice as well. When they come in as an LP, we tell them you can be as hands-on or not hands-on as you'd like to be. And if it's a company that's related to your industry, we would appreciate your input. If it's a company that's not in your industry, but you want to learn about those industry, we can also plug you in with those companies. But I feel that over the last year or two, there's the level of overconfidence, because some family offices are like, oh, we can invest our own directly into early stage, and because the market is doing well, the values went up. So, well, we can make a lot of money without having to rely on professional investors. I think that's going to be tougher this year or ongoing, and especially with the valuations being so high and chasing some of these deals. Then if it doesn't support that fundamental, then there's going to be a big correction. So I'd like to learn more. Always happy to have a conversation.
Great observation. Thank you very much, Ricky. Wiz, any last words?
Yeah, I think we've got an interesting few years ahead. I mean, you shared at the top of the session, Arthur, that this year there's been some dip in the amount of investment made. But what's interesting is last year, 2021, more money went into funds than ever in history. And so in a lot of ways, the table has already been set for the next 3 years. That money is going to have to go somewhere, even though there's a dip right now because things are weird. We're going to see more money outflow into startups over the next 3 years than ever. And I think that combined with, a flood of new GPs, many of which have suspect levels of experience and abilities, and also, weird geopolitical times, et cetera. It's going to be a wild few years from my perspective. I'm excited.
What about you, Alexa? What do you think?
Maybe my hopes for the next couple of years. My background previously to getting into VC was as a marketer, and it's because we have a family office audience here. I wanted to just share that the person who sort of believed that I had the chops to make smart investment decisions was my father. And there aren't many people in the room who look like me. Maybe I remind you of your daughter, your second wife. But
what happened to first wife?
In addition to the gifts of capital that my father instilled in me, he also instilled in me the confidence that I could do this job. So something I'd sort of really encourage anybody who's working in a family office right now is even if that next generation are marketers or working in entertainment like I was when my dad sort of gave me this assignment, I've managed to be able to grow into it, and I think lots of people do once you sort of have that confidence in them.
Great.
Fantastic. Great job.